I'm Dennis Williams, the creator of CashMap Pro, and thanks for joining me for this illustration of the power of two simple moves the banks don't share with us that would be significant in helping us build financial wealth, get out of debt, and pay less interest. They're also the two principles at the core of my software called CashMap Pro. Let's start with our family that we've been using the last couple of videos in which they're paying off $6,849 in credit card debt at 24%. On the 1st and the 15th, they deposit $1,976 into their bank account. Their total expenses are a little over $3,600 that they pay on the 30th. They're putting aside $60 in savings on the 30th, and they're making a minimum credit card payment of $136.98. And that's leaving them $200 left after they pay their bills. They're feeling really tight as far as having extras to do anything. They're not told that a line of credit is an excellent source of building financial wealth. They're not told against the poor uses. They're not told the simple steps to reduce the total interest that they pay using a line of credit. They're not told the importance of knowing your billing cycle when using a line of credit, and nor that the date you pay your day-to-day expenses are important and also minimizing your interest costs. All of the options that the bank gives this family are all poor. Either they don't have enough money, or the interest rate the interest that they're going to pay is ridiculous. Two simple rules that they need to follow is number one, scheduling all your bills to the last day of the billing cycle of your line of credit. And the second is as you get paid, move all your income into the line of credit, keep it there until you need to pay your bills. This keeps your money working 24/7. The impact of these two steps on the average daily balance and the daily interest charge that we're billed is by moving the income, it lowers the daily interest cost and the average daily balance. By paying bills on the last day, it keeps the balance low on the line of credit so that you charge less. Paying less interest means you have money that goes to principal. And in this example, the line of credit enables them to pay off this debt in 2 years at a total cost of $251 using a line of credit that's charging 10%. And it only goes up to $551 if the line of credit's interest is 24%. So let's just do a quick illustration. They start off by paying off their line of credit on the 1st. Their income comes in immediately and lowers the balance to $4,872. On the 15th, they do it again, and now the balance is down to $2,895. And then on the 30th, they pay their bills, and the balance goes back up to $6,572, but the average daily balance is only $3,940 because they kept their income in the line of credit, keeping that balance low, and so their interest that they pay is only $32.84. If they pay their bills on the 2nd, instead what happens? We're going to see that the line of credit jumps to $8,549. And then when they pay their bills on the 15th, it lowers it back to $6,572, but now the average daily balance has jumped to $7,000 and they're going to pay interest of $61. So we can say that by looking at paying your bills on the 2nd, there are 13 days out of that month that the balance is at $8,549, and 16 days it's at $6,572, while paying it on the 30th, there are 15 days that the balance is just $2,800, and 14 days is at $4,872. So consequently, what we're seeing here is that when we pay on the 30th, the daily interest cost is very low against what the actual amount outstanding is on that line of credit, compared to if we end up paying it on the 2nd, in which the interest costs are significantly almost double. So looking at the average daily balance, we first see here's what the ending balance is every month over the 2 years for this line of credit. If we pay it on the second, the average daily balance is actually higher than what the actual ending balance is on the line. And that causes us to have to pay more. And of course, by paying it on the 30th, the average daily balance is dramatically lower, so less interest is paid. So the impact of when you pay your bills is huge. If we pay it on the first of the month, we see the number on the left versus paying it on the 30th, in which the dollar amount differences are very low. It's almost as if the interest rate doesn't matter because we've kept the balance low on that line of credit. So my question is, why should we pay extra to our bank? And this is probably a good reason why we're not advised by the bank to use this strategy. But it's easy for any of us to do. The bank could advise us to move our income to the line as a loan payment that satisfies any minimum payment that meets their bank requirement, their payment requirement. That in turn just dramatically lowers the amount that's owed, and how easy it is to reschedule paying their bills to keep the line of credit balance low. And of course, they could advise that the longer and the lower you keep the balance, you pay less interest. The bank could also advise us about their process for setting up your billing period. They could advise us on what our current billing period dates are. They could advise us on the best billing period date for our particular situation. They could advise us when to submit our application to get the best billing period for us and the best way to use their products to make it easy for us to put this process in place. But they don't do that. And so this is why I created CashMap Pro, to give us vision into creating your own personal solution based on your income, interest rate, and cash flow. A large loan does not require a big line of credit. The solution that's given is based and adjusted for higher interest rates. You're given how much to take off to get started and when to repeat the draw, and you can use it for any loan, and even enables you to use it to create refinance options also. CashMap Pro provides you these personalized solutions so you can see the loan payoff date and interest savings. You can create and save a wide range of scenarios. Personal information is never collected. You're able to create future expense changes and see the effect before you ever spend a dollar, and is designed to be easy and used repeatedly for future loans that you might have. You're welcome to attend a free webinar. It's designed to help you build your confidence on creating your own low interest loan around a line of credit, to help you save time paying your bills and save thousands of dollars. If you want to learn more, visit our website where we've got lots of articles, ebooks, interactive resources, consulting options, and of course the webinars. Thank you.